VA loans are one of the most powerful mortgage options on the market for veterans, active military, and surviving spouses. The power behind the VA loan comes from a handful of significant financial benefits not typically found in other mortgage types. These advantages, compared to different loan options, are a big reason why VA loan volume has grown considerably over the last 15 years. Benefits that matter to veterans. This historic benefit program has helped millions of veterans, service members, and military families achieve the dream of homeownership. As a result, VA loan use has soared since the Great Recession, and these government-backed loans are arguably one of the best mortgage products on the market today. Why veterans choose the VA loan: no down payment required, competitive rates, limits on closing costs and fees, VA loan funding fee exemptions, no PMI required, offered only to U.S. veterans, no loan prepayment payoff penalties, having a VA appraisal conducted, relaxed credit requirements, previously used on a different property, multiple forms of acceptable income, no loan limits, and assistance to avoid foreclosure. Let's take a deeper look at the most significant VA loan advantages. 1. No down payment. By far, the single largest benefit of the VA loan is that qualified veterans can purchase without a down payment. This huge advantage allows veterans and service members to buy homes without having to spend years saving for that typical lump sum payment. Saving money and building credit can be difficult for service members who are constantly on the move. With the VA loan, qualified borrowers can finance 100% of the home's value without putting down a dime. 2. No private mortgage insurance. Private mortgage insurance, PMI, is insurance that protects lenders in case of a borrower default. Many conventional lenders require borrowers to pay private monthly mortgage insurance unless they can put down at least 20%, which is challenging for many veterans. Conventional borrowers will need to pay this monthly fee until they build 20% equity in the home. FHA loans feature their own form of monthly mortgage insurance. Unlike conventional and FHA loans, VA loans don't require monthly mortgage insurance. No private mortgage insurance means veterans who secured a VA loan last year will save billions in mortgage insurance costs over the life of their loans. No PMI allows veterans to stretch their buying power and save. 3. Competitive interest rates. Here's another big way the VA loan program saves veterans money: having the lowest average fixed rates on the market. VA loans have had the lowest average 30-year fixed rate on the market for the last 6 years, according to data from ICE Mortgage Technology. VA interest rates are typically 0.5 to 1% lower than conventional interest rates. Lower rates help veterans save every month and over the life of their loan. 4. Relaxed credit requirements. Since the Department of Veterans Affairs only oversees the loan program and does not issue loans, the agency does not set or enforce credit score minimums. However, most VA lenders use credit score benchmarks to help assess a borrower's risk of default. Credit score cutoffs can vary, but the minimums are typically lower than what borrowers need for conventional mortgages. Veterans don't need anything near perfect credit to secure home financing at competitive interest rates. VA loans are also more forgiving when bouncing back after a bankruptcy, foreclosure, or short sale. 5. Closing cost limits. All mortgages come with fees and closing costs, but the VA actually limits what veterans can be charged when it comes to these expenses. In fact, some costs and fees must be covered by other parties in the transaction. These safeguards help make homeownership affordable for qualified homebuyers. VA borrowers can ask a seller to pay all of their loan-related closing costs and up to 4% in concessions, which can cover things like prepaid taxes and insurance, paying off collections and judgments, and more. There's no guarantee the seller will agree to that request, but veterans can certainly ask during the negotiation process. 6. Lifetime benefit. One of the most common misconceptions about the VA mortgage program is that it's a one-time benefit. Veterans who qualify for a VA loan can use this program over and over again, and the benefit never expires. Unlike what you may have heard, you don't necessarily have to pay back your VA loan in full to use your benefit again. It's even possible to have more than one VA loan at the same time with second-tier entitlement. Don't think that using your home loan benefit decades ago means you're no longer eligible, or that because you have a VA mortgage at your current duty station means you can't purchase again with a VA loan when you PCS across the country. 7. No prepayment penalties. With some types of loans, paying off a home loan before it matures results in a prepayment penalty. This is because lenders miss out on additional opportunities to collect interest payments. The prepayment penalty is a way for financial institutions to recoup some of that money. The VA loan allows borrowers to pay off their home loan at any point without having to worry about a prepayment penalty. Borrowers are free to consider future home purchases and refinancing options with the absence of a prepayment penalty. 8. Foreclosure avoidance. VA loans are one of the safest loans on the market and have been for more than a decade. That's pretty remarkable, considering that about 8 in 10 homebuyers don't put any money down. The VA mortgage program has emerged as a safe harbor for several reasons, including the VA's residual income guidelines. The VA has also done a tremendous job advocating for veterans in jeopardy and working to ensure they stay in their homes. The VA Guarantee Program isn't just about getting veterans into homes. It's also focused on helping veterans keep them.